Oh, okay. This is the midweek review for September 10th, 2025. How are you guys doing today? It's been a kind of a weird little week so far. Right?
Hey, been doing all right. Ain't really hit the charts.
How about you, Anna?
I'm good. Today I did something but hit my break even.
Oh
I
man.
bought from London FAG. That was good one, but yeah.
Oh man.
Mm,
Well, um, it's middle of the week. We still got some setups left.
yeah.
Um, let's go over what we got for the rest of the week first. So as far as news goes, you can see we had our PPI and it was worse. A little actually lost a little, came off a little bit. So that's actually a good sign that it was down. That means that the producer prices went down 0.1%, so that's good, but I mean, it's only 0.1%. And you can see that the market's kind of reacted decent to it, with some, choppiness, but still pushing up to make a new high on ES and a new high on ES and a new high on NQ, and we made a new high on YM. So it actually did play out for a positive, even though it wasn't that great. And then I think we had Oracle the other day report earnings, and they were up 36%. So that was a nice move on Oracle on Tuesday after the close. So that was our biggest stock trade. That was our biggest company of the week, I think, in my opinion, so far. And they had a 30%, 36% move. We do have Adobe coming up. Um, they are probably going to be mentioning a lot of stuff that they plan on doing with AI. I don't see them being a big market mover, but you know, um, they are going to probably show some interest for some people that are doing options and regular stocks. And can y'all see my screen? You guys can see my screen, right?
Yeah.
Okay, okay. Then
Mhm.
we got Chewy. This is, low key, this is actually a decent trade, a decent company to trade options with over here, Chew. So, keep that on the radar. I'm gonna mark up this company for their next earnings to see if we can get anything coming up for them. Nobody else, but this was probably our big winner. Probably expect a win out of Adobe too, but I'm not getting any options on that. But those will probably be the ones we get into. Um, since we're talking about options, let's look at our plays. I didn't get a chance to get into it, but it's been a busy week. But oh man, you can see it's already up. I hate I missed this. Um, so we pretty much took this range of this candle right here. We were looking at this low, and we had an alert at 9:42. And if we had taken that, we would have been up at this point 5%. And if we looking at options, so at the high, we would have been up around 9%. And if we looking at options, that's pretty much 100% return on our setup almost. So, and I think that I think I should have just went ahead and bought this one. All of the option plays, I should have just kind of bought those. So I kind of regret not taking these. But please, if you guys get into anything, let me know because I don't want, I don't want to miss out on these, man. I don't know when it triggered, but I'm sure I was at work when it triggered. And let me look at the contract on this one. This is Clean Spark. We were looking at the let's pull up the options window real quick. I like this little tool. Like I'm not gonna lie, I kind of like this little tool right here. Um, we were looking at the Jan 15. We were looking at the $10 contracts and we were looking at the $12 contracts. A lot of the volume is being traded on the $15 contract though, but that's okay. And when we were looking at this, um, when we were looking at this, right?
Corey, real quick, is it better to trade on the contracts with more volume?
Uh-huh.
Yeah, I thought so. Okay.
Yeah. Yeah. That's usually what you want to look for. Yeah. So when we were looking at this, it was 320, 305 to 320. That's up 25 cents. So I want to say we would have been we at a peak we would have been probably at like 380, 390. What was that on that contract? Yeah. So the peak probably would have been like 380, 390 on this contract, which means that we would have almost been up 100% on this. So um that means that if you had a bet $300, you would have been up $300 pretty much is what that implies, at the height. Right now you would be up roughly around 20 cents. So you would have been up roughly around 40% right now. So roughly about half of that. If you were at $300 at risk at the time, you'd be looking at probably like 320, 340, between 320 and 340. I mean 140, 140, I'm sorry. So that's why I like options. So, if you were ever wondering why I'm always looking at them, that's kind of why. The other one that we went over was Myra. I don't know if I went over this with you guys, but I sent this to my buddy. I hate that. Why is this doing this? I already did this. I already did this. Give me a second. I already did this. Gma was another one. Gma was another one that I was looking at too. Um, this one's inside of a gap right now. It was inside of a gap, but I think it's gonna keep going up. But if it doesn't, this is what I'm looking at on the downside. I just want to see a candle get closed below before I start looking for sell. But I do. It's still really really bullish right now, and it's bought up every move. So I'm not really ready to take a sale yet. But if we do manage to get a close below one of these daily candles, it may be an opportunity um, to go ahead and sell off. And I'll send you guys this one. I'll send you guys this one. I'm not really looking at Jima though. This is for my buddy that he's got some Jima longs, and I don't want to touch it right now. I like to stay long on option plays. I'm not really interested in buying calls yet and going short. So I'm just gonna stick to the long side on the option plays. But the other one was Myra. Myra is still sitting, right? We still sitting where kind of where I was thinking we would be. So Myra might be the best one still because we haven't quite moved yet, and I like the way that this candle today is retracing a little bit. But we did get a close outside of this high right here, so we took out a candle high. So, I like to see if we gonna be bullish, I like to see us take out a candle high and close above. And we did on this day. So I might take a look back at this one more time. I'm not really in a rush though, because I still think we got one more down move. I think they're gonna take us down, before fourth quarter or right at or somewhere in between Q4. So they can get their positions in. I don't know if you guys noticed this, but a lot of, no, I don't want to say every, but a lot of times we get a dip and in the fourth quarter, and then we just buy it up from there, because we get the Christmas money, the Santa Claus rally, a lot of times is what they call it. So this is another one. This SoFi, kind of the same look. I think $30 is our target on SoFi. We do have all-time high at $28 and 26 cents on it. So with us being so close to it, I think we'll go ahead and break this. Same thing, we kind of stuck in a little range up in this high, but what I'm looking for is for us to still go ahead and take out these high and try to tap $30 at some point soon. And if we don't, and we start getting a candle close below, we got our first candle in a couple of days. We got our first candle to close below a candle today. That was our first one. But you can see we inside of this fair value gap right here. So we still got room to push up. So that's why I'm not really trying to sell it, but this is my other option play that I'm gonna be looking at on SoFi. On SoFi, so on SoFi, the contract that I'm gonna be looking at is the let's pull up the options tool again over here. And let's look at SoFi. I don't know if I had a contract picked out for this one yet, but let's take a look. So the October 10th contract, that's too soon. I don't know if we're gonna be able to get any leaps on this. So yeah, I mean $400 is okay. 400. I could do release one or two of those and still, manage the rest to get the rest too. Okay, so the January 16 contract looks pretty reasonable. Maybe you can get like this $27, the $27 contract. That's $300 right here. You can see where all the volume is in that $30 contract. A lot of volume at a level could mean one or two things though. It could mean that you have puts in there because that volume doesn't necessarily tell you whether it's buying or selling. It just says it's a lot of volume at that particular price level. And or open interest, open interest and volume kind of work side by side. But let me see what the open interest is on that. The open interest is like your pending orders, like how many pending orders do you have at a certain price, and your volume is actually like how much has actually traded at that price. So your open interest is your pending volume, and your volume is your actual traded, and it could be either direction at that. You just know that, hey, this amount of contracts came in at this price. we can make an educated guess to assume that it's a buy or a sell, but that's kind of what you want to look for. And so the open interest is, so the volume is 49.12, and the open interest, which for some reason they don't have it on here. Let me see if I can add it. No, they don't have it. They don't have it in here. But I can look at it from my phone, and I'm looking at the open interest at $30 is 20,791. So that's a pretty big size on that. The second biggest is a $27 contract, and that $27 contract is just below the all-time high. So that may be, resistance. That may be some type of resistance that we might get at $27 area, which is right below this all-time high. And then, maybe we get some resistance at $30. That's a lot of people planning on coming out of the trade at $30. It could be a slew of anything, right? And you can see at the $27 strike price, we got 3,555 on the volume. And again, we can't see it on this screen, but the open interest is 26,205. So it's a lot of people sitting at this $27 and $30 price point. So let me just take a look. I want to see what $25 is too. Whoa, a lot of people at 25. It's like 51,000 at 25 on the open interest, even though the volume here. But again, so I like this January 16th contract, and let me screenshot this because I don't know how else to grab this right now, but we're gonna screenshot this, and I'm just gonna drop this in the group too. And then so that's SOFI on the Jan 16 contract. And I'm looking at either the $27 or the $30 contract. So I'm gonna put that in the chat. SoFi one.
You can paste that on your chart also.
I'm gonna throw the chart in there too.
Mm.
Yeah, I'm gonna throw the chart in there too. Throw the chart in there too. And that's gonna be the $27 or $30. Okay. Y'all like these option plays?
Yeah.
All
It's good insight. I need to learn a little bit
right.
more about it.
Yeah, you just gotta get it set up.
Yeah.
I promise you it's not hard. I promise you. You know enough already. You just need to learn the terms. I promise you that. Here's the SMCI setup. This one pretty much ran already. I still may look into this, but I'm kind of gonna sit on my hands on this one for now. Cause this one already, the contracts that I was looking at were already kind of high. So I kind of I'm gonna wait on that, but I'm gonna send y'all the chart anyway. So that's it for all the option plays, and I will likely be executing on those on at least one of these plays. I don't know yet which one. I'm gonna just kind of pick and choose which one. My favorite out of all of those is the Myra play right now. The Myra play. Which let me I didn't actually give a price. So let's go to Myra. man, I like this now. I was like kind of like I don't like this, but now I actually like this. So yeah, yeah. See, like I like this. So there's the October, but that's still a little too soon. But I'm already seeing what I like to see. I like to. Here's my sweet spot. I'm not necessarily worried about the strike price, right? I'm worried about the strike price as far as what the chart does, right? When I'm looking at the strike price, I'm basically just wondering where is the price point on the chart, right? Like right now, the strike price is $15 and 86 cents, right? I think that we're gonna move up into this $17.68 range right here inside of this daily fair value gap. So I, I like to look at the price, the strike price, just to know where we are on the chart. But what I'm really looking for is the bid and ask, right? I'm really paying attention to what are the bids and ask price on the chart because that's where I'm going to be buying my calls from, right? That's what I'm getting um for that's what I'm going to be looking for the to buy the calls. So if I'm looking at this and I'm looking at the January 16th contract, which is okay, that's a good, that looks like that's far out enough because I think we will run into this before January. And if I wanted to look at the December contract too, like December of 2027 contract that's here, that's a far out. Um, let's see, this one's June. Still, I think I can get something cheaper. I wouldn't mind taking this January 15th of 2027. I could do that to get like the $22. The $22 contract looks reasonably priced. June of next year, we're saying, this is a reasonably priced. So what I'm looking at really, because I'm buying calls, is I'm buying calls. So I'm looking at the ask price. This is the price that I'm looking at this entire row. I'm looking at this entire row to kind of determine what price I'm going to get it for. So if it's $1, like this is the $25 contract. So this means that if I bought this now and the current strike price is at 15.86, I'm expecting that before this date, before this June 18th date, that we're gonna hit this price of $25, which is up here somewhere. That's basically what I'm saying, that at between today, if I bought the contract today, that I believe that we will make that $25 before this date, the 18th. That's basically what buying a call is, right?
Okay, so one question, like,
Mhm.
what do you see first? Like, first your chart, then what is your target price, and then come on in means date wise,
Yep,
and
that's exactly.
means first you see like a chart like you are expecting it will go till 25. Then
Hmm.
you came here, then at what is means when is strike price is at 25 in expected like 1 year or after 1 year, whatever
Yep,
is the date,
yep.
and then ask price, and whatever is ask price lower ask price you are getting for call, so you are choosing that one, right?
That's it. That's
Okay,
it. The
okay,
the entire process is first find out what are we doing on the chart.
okay.
Once we find out what are we doing on the chart, right? In this
Mm-hmm.
case, I think we're going to go from 15.86, which is this price right here,
Mm-hmm.
to at least this range, right? Which
Yeah.
means that I think we will at least go to $17.68 before this date, right? Or if I'm looking at a sooner contract before that date, right? But for me, I am actually saying that, hey, I think we will go to $25, take out this high and go to $25, which is somewhere up here, somewhere. And then between the time that I purchased this, which let's say I bought it today in June of 2016, I mean 2026, sorry. So once I determine like, hey, I think we might be going up. Now is my decision to determine which expiration I want, right?
Yeah, means how, okay, your target is 21 or 25, but how do you decide that date? Like it will
Yeah,
be
that
after
one.
1 year or 2 year or
Right,
6 months. It may
That's
come after 6 months also, right?
it's kind of just up to how you trade, right? So for
Because
me,
in option, like as far as you go by the date, it is costly, right?
mhm, yeah, the further you go back, the more expensive it'll be. But
Right. Mhm.
but the more time you have to sit in that contract and let it play out. That's the advantage. So when you get the leaps, it does cost more sometimes, but it gives you that opportunity for it to be fluctuation, right? It gives
Okay.
you more time to fluctuate, right? So because we're swinging these, right? We're not looking for this to immediately buy. Like,
Mm-hmm.
I'm not really expecting a move out of a leap to happen until like maybe 2 or 3 weeks down the line, right?
Mm-hmm. Mm-hmm.
So I'm not buying these and expecting the next day that it goes up. But in some
Mhm.
cases it does, right?
Mm-hmm.
And if I bought more than one contract, then I could take a piece off, and let the rest of it ride, right?
Right.
And so another reason why I look for the outside contracts, right? It's cheaper to find the expiration dates that are sooner, right? So like right now, this same contract, let me switch this off. This same contract, and remember, this is the June contract. If I go to
Mm-hmm.
October contract, right?
Mm-hmm.
Look at the prices now. So the available strike prices right now are um around 1586 still. I got the 16, 16 and a half, 17, 17 and a half. And I do, like I told you, I think it's gonna go to 1786, right?
Yeah.
And I could get this same contract for 65 cents, right? Which
Mm-hmm.
means and that is a decent trade, right? I could be getting that. But that means that, I need this to go to 130, 130 to double it, right?
Mm-hmm.
That means I need this to go from 65 cents to $1.30, right?
Mm-hmm.
Between now and October the 10th, right? So what I'm saying over here is if I bought this today, this one,
Yeah.
I I believe that we're gonna go from 1586 to roughly around this point, 17 and a half.
Okay.
But I think it's gonna go there before October 10th. I don't think so.
Mm-hmm. Okay.
And if it does, then that's cool. But I feel like I got a better opportunity to get the contract that's further out. So I'll pay a little more to give myself a little more time.
Okay.
That's the logic behind it.
Got it.
Because I could get it for 65 cents, but you know, and I could buy more of this contract because it's only 65 cents, which is $65. So, I could buy, where I was going to spend on this January 18th contract, right? So if I'm looking at the January 18th contract and I'm seeing that I like the $25 strike price at $1.79, right? That means that one contract costs $100, $179, right?
Yeah.
multiply this by 10, right? By 100, whatever the case is. Yeah, 100. So
100. 179.
so this is for one contract, and let's say you're dealing with a small account, right? And let's say you only got $1,000 in an account. You probably don't want to buy more than one of these, right? Because that's about 10% of your account if you buy one contract. But if you were looking at at the October contract, you could buy two contracts on this, and you spending 130 on it, right? Or you could even buy the three contracts and you still, now you're looking at pretty much the same as one contract of the June, you know, you know what I'm saying? Because three contracts will be around 195, right? So, 190, 195 roughly, right? But the June contract of next year is for one contract is 180, right? But again, if I bought this though, I bought time for this to move. In the October 30th example, I bought more contracts, I bought more volume, I bought more contracts, but for a shorter period of time. So that's the reason why I like to look at the leaps versus the shorter term, because what we do a better job at our long-term outlook in a lot of cases than we do in our short term. So because of most, I won't say most, but I'm gonna say probably like 80 to 90% of my long-term projections are right. 80 to 90%, I can say that with accuracy, right? Usually my weekly outlooks go into whatever direction, at least one of the directions that I put on the chart. And if I'm looking for only my long projections and I focus on that, in most cases, we can go back and look at the charts and see like you know, even looking over here, let me clear this off. If we can look at this chart, because I traded this back around sometime around last year too, right? So you can see over here, if I had have been, I look for a buy, right? This buy went good on that, right? Look for a buy or a sell, right? We look for the buy or the sell. If we had a sold, we would have got the sell, right? So at some point, even if we had to try to buy, we would have been okay for a little while right here. We would have been okay for a little while, but we still would have had enough time to make at least, 50 to 100% return. Even if we were absolutely wrong at trying to buy up here, here, or here, if we got in right here, we would have had at least, let's say we get in up here and we wrong, right? That's 100% move, even though we wrong. 12%, that's 120 and 120% if we bought right there. If we bought over here and before it sold off, that's another 12% that it went up. That's 120% return. So you would have at least made what you got. You would at least double what you got right here. And if you were buying calls, which means that you're selling, right? At least if we get into our target right here, that's 170%, right? So at that point, you doubled it and then some, And if you bought a leap, let's say you bought a leap for, it's November of 2024, and you bought the leap for, let's say, December of this year, shoot, you could be still in the call right now, This was up 400% at this point. Shoot, yeah, you could still be in that call making money, So, that's kind of how you want to approach it, It's how you want to approach it. So,
Like, I was trying to understand these things. Like, I means I think I do opposite. So that is what I don't have that confidence in. option trading.
You got it.
It kind of reminds me of when I was trading HFX when I was with IML.
Mm-hmm.
But it's just that you was on a short period of time of how long you can stay in a contract.
Mm-hmm.
Whereas this, you can kind of pick and choose how long you're gonna be in that contract or
Mm-hmm.
hold that contract.
Mm-hmm. Mm-hmm. Yeah. This the one I like, y'all. The $25 one.
Got
For
it.
June 18th.
Like, okay, I got this, like, for 25, you are choosing this one, right? But you'll not consider volume here?
Yeah, I'm okay with the $75.
75.
Yeah, I'm okay with it. This isn't a highly traded, like this doesn't have a lot of volume on a regular basis.
Okay.
So I'm okay with that.
So
Um,
how do you decide, like, what is the good volume I should consider it, or
it's just
what?
this
Sorry.
one, this one is one that I like. I'm not really usually concerned with the volume, and that's
Okay.
because this one, here's another reason why I like this one, right?
Mm-hmm.
This one move whenever crypto move.
Okay. Mara is with crypto?
Yep.
Oh, okay.
Viral moves when crypto moves. So that's another thing, right? If you hear Bitcoin and crypto moving, Myra is probably moving too. So that's like another little way that I play Myra, right? I play
Mm-hmm.
Myra like if I'm hearing Bitcoin moving or if I hear a lot of people talking about Bitcoin, instead of me trading Bitcoin, I just
Mm-hmm.
go ahead and get Myra.
Okay.
That's how you do that, you know. That's
Mm.
that's that's why.
Okay.
That's exactly why.
Mhm.
So, and it's safer, you know. It's
Mhm.
safer to deal
Yeah.
with than trying to trade Bitcoin, you know. So,
And obviously, you're not going to wait till June 18, right?
nah,
Before that, you are getting your target. You
oh,
will
I'm
be.
out of the thing so quick.
Mhm.
Like if it go 100% or
Uh-huh.
200% and you know, I might get out then, you know, and knowing that it could still go somewhere, right? Because I'm okay at that point. I made at least my money back, you know. So it's not even about whether or not I'm gonna stay in it for the whole time, right? Because
Mhm.
I might just be like, you know what? I don't like how this look, you know. But I'm up a pretty good amount. I'm at least up, you know, 50% on this trade. So I'm gonna go ahead and just take what I got and get up out of here. And you know, that's another reason again why I like the leaps because of that same logic, you know. You got plenty of time to make a decision. Plenty of
Mhm.
time to think through what you want to do and you know, you can go with it however you decide you want to approach it. So that's the $25 and the ask price is right now it's 180, 179. Oops. I'm glad this little AI thing on that's recording all this. It's I need to get all this. All right, now let's look at indices, right? I only took one trade so far. I took that Monday and I already told y'all about it. We can go over it, but I want to start with gold. I had it. Remember I told y'all I had this pending order right here? Do you see what happened? I took it off. Like, all right, I had a pending order inside of here, right? But I took it off
Yeah.
because when I saw we went ahead and made this move, I was like, it's probably not gonna come back down. Got an alert. This thing tapped it and it's already gone. So this one's done. We already went for 45.4 points, which is, 454 pips if you're counting that way. So, and we already hit target, so that's done. But for the rest of the week, we've already pretty much dealt with this fair value gap for the most part. We made a new all-time high. And we do still have some big news coming up. So maybe we go ahead and tap 3,700 if we keep going to the upside. Maybe that's it. But for right now, we got the all-time high and we got this low as our range, overall range right now. That's the low from today. And then we got the high right here. Let's look at the 4 hour. Nothing on the 4 hour except for this same fair value gap. We kind of ranged a little bit today. And then nothing. So we really just kind of stuck in between this low and this high. I don't really see anything on this right now. So gold already did what I was expecting it to do. So I don't have anything for gold. I think we could have a move up, but I don't see a good place for us to kind of take advantage of it because we already bounced off of where I would think we would have, which was being right here at this low and at this low. So anything else is we coming down into this range, which again, we actually did this already too. So that was the original move I was looking for us to make, was to bounce down here. And we missed my 35.91 entry. And so once we missed that entry, I was like, maybe we hold inside of this candle. And we did. And I took the pending order off that was right here and missed that entry. So, I'm just going to leave it alone at this point. So, but the next spot is 37. 3,700. And if we come down, maybe we get a bounce. I still want us to try to come into this area. So I still can see us coming back down there. And you see this IFVG right here, we got the weekly inside of that too. And we got liquidity right there. So I still think we could possibly come down into this. But at this point, I'm not going to try to mess with it. I'm just going to
Yeah,
leave it
like
alone.
same thing, like on 30-minute, this is showing reversal also. So I'm also expecting same thing.
Yeah. Yep. Good call. What's the, so this is goal 42, 342. So this is kind of what I think. If we either gonna just go ahead and buy through this, or we'll just dip down, hold round weekly. I don't think we'll go bearish on the week on this. Let me go to the actual chart and let's see gold and dollar. I didn't look at dollar. So dollar, yeah, that's lining up with basically what we just said on dollar. Dollar took the low right here. And we pretty much set inside of this fair value gap that we had drawn up earlier this week. And we either gonna go ahead and trade above these equal highs we made right here and see if we're gonna try to run for this high, or we're gonna take this low out and try to go ahead and trade through this low. So what I want us to do is go ahead and take this low out because that'll lead gold up on the dollar, on the daily. Dude, leave me alone. Sorry. Trading View is like making you do this personal information verification. I already did it. I don't know why it keeps popping up. But dollar on the daily.
Personal verification for what?
Personal, verifying your personal information. I don't know.
But it's not doing with me.
I don't know why.
Okay.
I don't know what's going on with that. And I'm like, wait, hold on. Like, hold up. Hold on. You ain't doing me. Right. So we did have a bullish day on dollar right here, and we did close above a high, but we still inside of this big bearish candle, right? So, and we don't really see any huge candles getting taken out. So, and even when we had our bullish day, on the bullish day, we didn't close above no highs. So I still see us going down. We might just not take out this low. So let's focus. The low we need to focus on is right there on dollar. And this is the weekly low right now. The high we need to focus on is these equal highs. I'm not going to draw it on the chart, but these two highs are pretty much our catalyst. If we do take out these highs, that should lead us down into this area right here. So um, here's that chart. This is gold and dollar. Then all of the indices, I'm gonna start with ES because that's the only one I traded so far. And I took somewhat of a sale on Monday, right above this area right here, inside of this fair value gap. I took it down somewhere along here. That was pretty much it. You know, I was expecting us to sell off because we had divergence with NQ. So on Monday, when NQ was making this high on Monday, I was trying to sell ES the same time. And I sold NQ around the same area. So I sold this high on NQ and this high on ES. And we didn't really get any follow through. It was kind of a chop session for the most part. And it really was also on Tuesday until we got this 10 a.m. candle. And definitely chop session on Dow as well until we got Dow was actually the best initially early in the week because we were saying that we would come up into this area and sell off, and we pretty much tapped it, sold off right here. And that was actually around the same time on Monday that I was looking to sell on ES and NQ. So this was extra confirmation that I had to take that sale at the time, but we didn't follow through on it. Then you can see we pretty much mitigated this fair value gap for the most part, right? So this is pretty much, we don't even need to use this anymore, but we don't have any new information. So we got to still use this for the rest of the week. We ain't done with it because they ain't done with it. So since they're not done with it, we still got to use this area. So because we just really been sideways, even though at this point it is neutral. It could go up. This could be a up or down move, and we don't really need this anymore because we've already mitigated it, and we just really kind of dealing with whatever decides to happen here. So we can go ahead and extend this out to, I don't know how I jumped on the Dow like this, but we on it. This was the low from last week, last Friday. We still got to deal with. And we pierced this all-time high on this candle. So we got us a new all-time high. And we got to deal with this low. It's yesterday's low or today's low. And we kind of still in this range. We do have a little fair value gap right here. Let's see what that look like on the 4-hour. Same on the 4-hour. We do have a little fair value gap right here. I'm kind of neutral on this. And mainly because it's been sideways this whole week. I still like our targets. I still like us to respond the same way. Because I think these lows are still at risk right here. If we sell off, if we buy up, I still think we just hit around that 46,000 area on this. So not a lot to change because we haven't done a lot this week. Haven't done a lot at all. We just sat around and played around in this area all week. So, but I think this week is just gonna be a week that I just kind of take what you can get out of this week. You know, I'm not looking for real strong directional trades this week. I'm just gonna, if I get a 10-point move on ES, I'm good. If I can get a 50-point move on NQ, I'm good. I'm gonna take that. I'm gonna go ahead on about my business. I'm probably gonna size up a little bit, but that'll be about it. I'm not gonna like try to hit no home runs this week. Um, Especially since I didn't get to trade but one day so far. So this is NQ. NQ is moving higher, but it's like chopping up, you know. It ain't like really smooth, you know. It's just like chopping higher, you know. So we already talked about it. We still like now we on the top end of this fair value gap. We still sitting around it though, like, you know, we're still sitting around it. So um we still need to kind of use this, and it's already again same kind of concept. We already pretty much have mitigated is we took out these highs right here. These highs are done, and we still got the all-time high at risk, right? So either we're going to we already pushed up into this fair value gap, tried to reject it, and then we tried to reject near the all-time high. So now it's just kind of like how we want to deal with it, you know. Let me unhide that. I don't actually need that no more. Just kind of how we want to deal with it. And I think that overall, if we do take out this all-time high, Can definitely look at the, all-time high being 24,068, 24,068. The next price point will probably be 24,250. So that'll be right around here. 24,250 area right here. If we do push up. So not really seeing anywhere we could reject. Like if we do push up, maybe we reject, but I don't think this move will come into play. If we do sell off, now if we do sell off, I still like this to be the low that we pay attention to. Now it's so quiet. Now it's so quiet.
I'm looking like I missed something. Actually, I'm doing on MNQ1, right? And you are doing that September contract.
Oh
So
yeah, we about to switch. Yeah.
yeah. So
The
I'm
contract switch is on the 19th. So
yeah.
I don't know. Did Top Step already switch?
Tops.
What do you mean switch?
Switch contracts. The contract rollover.
Oh,
Mm,
not that I know of.
yeah, I don't know. I gotta
No,
It,
check.
it's still September one.
Still September. Okay. Still September. So we still in the U contract. Okay. The next contract is the
Z.
Z December contract.
So like one thing, like for MNQ, MES1 and Dow, there is U, right? And for gold, this is V. Did you
Mhm.
notice that?
Mhm.
So why?
It's just the naming convention. I don't know the logic
And
behind.
that is October also. Like for indices, this is September, right? For
Yep.
October is for a gold is this is October.
Yep. Yep. Different contract expiration.
Okay.
Yep. So we in the V contract right now. The Z contract is next. When does the gold contract? Gold expires over here. So we good till October on this one.
Yeah.
I don't exactly know. I'll have to look that up.
What?
Why it
Okay.
what the naming behind that? That's a good question. I should probably know that.
Naming is one thing, but like for everything, expiry is like there is only 4 contract, right?
Mhm.
Um, so why this is different?
Yeah,
Why this is October?
yeah. So we do got this little liquidity right here
Mhm.
for short term. It's a possibility we sweep that and then stay inside of here and then go up. That's another possibility too. We could be doing something like this where we sweep this liquidity and it look like we're gonna sell off, but then we hold inside of here. So that's the third option right there. That's the third option. So
Today after PPI, when it retraced and came to that London FPG, I thought it will go up.
yeah,
So I bought, but there it was like,
that wasn't a bad buy.
yeah,
Uh,
that was not means I saw because I waited till 11:18. 11:18, my on IP broker, my buy limit got hit. Then I put on top step.
yeah, that wasn't a bad buy.
So that
Because
was the
bought off
reason.
this one right here on this 1 hour fair value gap. It bought off of this one on here and on here.
Mhm.
You know, so I don't see, it just like this buy that it's triggering right now
Yeah.
happened off of this top of this inverted fair value gap. So I don't see that being a bad buy. I
Mhm.
know why you just try to do it.
Yeah. So that time when it get started 11:18, that time Dow was going down.
Mm-hmm.
So on WAP, this NQ was up. That's why I was like confident about this buy, and Dow was going down.
Yeah.
So then I thought, okay, it may be it will pull that down.
Yeah. I like
It
to
did.
go candle for candle too, though. Like with the, and this is for you, Trees. Like another thing I trade too is divergence, and Anna trades it too. But the way I look at it is when I'm looking at the charts, right, on the 1 hour and the 4 hour and 15 minute in particular, I'm just trying to see is NQ and ES at a high at the same time. Are all three of these at a high at the same time, right? And if they are, how are each one of them handling the high, right? So if we on the 1 hour, right, this made a high at 8 o'clock. This made a high at 8 o'clock. This made a high at 8 o'clock, right? But at 9 o'clock, ES traded further up into this high, and Q didn't. It just dropped, right? Dow just dropped on the 9 o'clock candle, right? So this kind of telling me that this high might be weak for each one of these. So if I'm gonna look for a trade, I'm gonna either take it on the stronger one, which would have been in Q, or I'm gonna be a little more patient with ES and knowing that NQ already showing signs that it'll drop. So in this case, then I might be like, all right, I think that this high is weak, but I don't want to take it on NQ. I'm just gonna wait. So then I'll just take it on ES instead because now the divergence is lining up that this is a weak high. So I'm gonna sell it. That's the same thing that happened on Monday, right? Both were at a high on Monday, right here, same highs right here. Dow was looking a little stronger than ES, but then you had Dow making lows, taking out lows. So adding those three together is like, all right, even though this is, trading near high, is looking like it could sell off because we already rejecting over here. And then this is already starting to sell off right here. So at the same candle, this is the 9 o'clock candle. We selling off on the 9 o'clock candle. We rejecting on the 9 o'clock candle over here. And over here, we are rejecting over here. So I'm gonna go ahead and try to sell off of this high because we weak on all three. And sometimes if you see them doing different things, I might pick and choose to see which one I'm gonna take because I want to pick the ones that are doing the same thing so that I can get the confluence to show that I'm, in line with the right move, right? So yeah, 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 yeah. ES, the last pair. Again, we still pretty much sitting around here, but we've traded outside of this one. But this is inverted, so we might come back down and use this one probably. We pretty much mitigated this. We took out this high, and now we got a new all-time high. And got a new all-time high. This is probably a fair value gap on the 4 hour. Yep. That's our highest probability. We'll probably come back into this. and there's a little gap right here. So I like this area right here. And kind of go ahead and get this on 1 hour spot on with the high of this fair value gap. We already tapped it once. We tapped in the middle. So maybe we will come back into this probably, but I think we do hold inside of here. This overall, I don't see a reason for us to trade out of it unless, the news just come back crazy. So I don't know if we need to keep this or sell off. And then if we do sell off, maybe we come down. I think this low still holds right here. This our range right here. I think we pretty much hold. This is a 4 hour. So, and then upside target, what is this high? 65, 65. You know where we going. We at least going to 65.90. 65.90. You know what that means. We just below 6,600. Plus, we already know how ES like the 90 areas. So this probably, what we'll do. And then another option is maybe we trade down into here, hold somewhere near the low of the fair value gap, but maybe near here, and then we bounce if we stay bullish. If we stay bearish, I wouldn't look into try to sell unless we close out this, mitigated this, and traded through and started to come down there. So that'll be what I would look for. Or we took the high out and then we started to sell off. But overall, that's what I would be looking for. So this is the range. This right here will put us at the middle of the week, right? Between the low of the week. Well, the low of the week is here. The high of the week here. Just about 50% of that is about right here. 50% of the range will put us right here. So that's pretty much what I'll be looking for. So that is it for me. I will post the video after it's done recording, and then I'm just gonna leave the rest of the day open if you got any questions.
So one thing like with trading you, how do you see, means where do you see that you are trading live data?
Trading live data.
Mhm.
You talking about to see whether or not you talking about the account?
Yeah.
Yeah, how
Well,
to your account
No,
too.
no, not account. Like where is like its name, micro, E mini, S&P 500, S&P
Oh,
50. So here should be one dot or circle, something symbol, right? Which shows like you are trading live data. I have that one.
I don't know what you mean, Anna.
Okay, I think this is MSU. Hold on. So yeah, I have that. After this CME, you have that purple bow kind of thing, right? I have this green. I don't.
Uh,
So
uh,
what? I don't know why.
oh, this because I'm trading. I'm logged into my TradeAvate account.
Okay. So when you change your account, like if I'm doing with interactive broker, so mine will be different.
Mm-hmm. Because I'm trading with the TradeAvate account, that's not a live account.
Okay.
That's a funded demo account.
Okay.
If I was in my live account, this will be a
Can you
little.
log in into your interactive broker? Just wait, just I want to check something.
hang on.
Today I had a big talk with an interactive broker. Still my problem is same. I don't know what is happening.
All right, hold on.
Mhm.
I'm gonna do it on this account. I am in.
Yeah.
I'm gonna switch over screens real quick.
And in interactive broker, you can log in one tab only at a time, right?
Mm-hmm. Hold on. I just got the notification. Still asking me this live verification stuff. And I've done this now for the fourth time. I guess it doesn't. Oh, mine at the bottom. So I'm gonna pull this back over here. So mine is right here at the bottom.
Yeah. So when you log in, and still that is purple one.
This is still purple.
I don't know why they were saying like means I'll share my screen and show you one thing.
Yeah, yeah. I'm gonna go ahead and stop the recording.
Okay.